Hello and welcome to Ask Austin. I know that it's been a while since I've done a video. I know you miss me dearly, so I definitely wanted to get back to you as quickly as possible. Today we're going to touch on a couple of topics. First off, we're going to touch on market volatility. We've seen more market volatility in the early stages of 2018 than we saw of all of 2017. So we're going to talk about that briefly, and then we're also going to talk about interest rates. So first we're going to talk about market volatility. On February 5th, we saw the biggest intraday decline in the Dow Jones ever. It almost went down 1,600 points intraday, and it closed down a little over 1,000, and it was down 4.6% on the day. Now, what does that mean? Well, ultimately, it means it was just a cool-off period. What you'll see is, well, wiped out 2018 gains. Well, think about that a little bit. That was February 5th. On one day, it was down 4.6%. It wiped out gains in 2018. That means in January, the gains were almost 4.5%. So something to look at in terms of perspective. The market was still blazing in January and you were making money. The only thing that happened was we took a cool-off period, took a break, and that was much needed. After 2017, there was virtually no volatility. You saw your returns, you saw growth in your accounts. Everything was great. You were excited. That hasn't been touched. All it did was wipe out January, and as we speak on this day, it has climbed back closer to where it reached the all-time high. So it's really nothing to worry about, despite all the things that you saw on the news. Should we be worried? Should we be pulling out our money? Is this the start of the recession? Is this going to be a bigger correction? What should we worry about? Obviously, concerns are one thing, but the widespread panic that the media out there portrays when things like this happen is just is beyond the scope of imagination. And that's why on that day I sent out some things to look out for, because you'll see it on the news. The Dow plunges, consumer fear, chaos. I mean, it's just a way to get you to watch the stuff. If you look at everything else outside of that day, you look at all the fundamentals, there's nothing to be concerned about in terms of a long-term dip or any type of concern about the market. The wages are up, unemployment's down, the company earnings are rising. So there's really nothing fundamentally to worry about, and we should really anticipate to continue this bull market throughout the year and beyond. So barring something that changes that, I mean, you really shouldn't be concerned. But there is one thing that you can do at times when we're starting to see more volatility. It's a great opportunity to sit down, look at your accounts, make sure you're putting enough time into making sure you're in the right positions. We've seen such a run over the last 7, 8, 9 years that it's easy to sit back and not do anything because everything looks great. You're making money, your account's getting bigger. You haven't really seen any dips, so it doesn't raise that fear. So now's a really good time to just reevaluate, not necessarily make any changes, but definitely reevaluate. And now's a really good time if you have some money on the side to make that go to work for you. Really haven't had a great buying opportunity, that was as clear as it is now in the last 2 years. So it's a really good opportunity if you have money on the side to look at possibly putting that into the market and put it in some places where you might have seen the biggest declines with this volatility. So again, nothing to worry about. If you have concerns, talk to your advisor. If you want to talk to me, definitely give me a call. I'd be happy to take a look at your portfolio and see areas that maybe we need to take a look at, or at least target to look at throughout 2018. Now, the other thing that you've probably seen on the news or in print is interest rates. It's a big topic of conversation in my business, but it's out there for everyone to talk about. And one of the biggest misnomers is the fact that they put out, well, the Fed's going to raise rates 3 or 4 times this year, what that means to you, how that could impact you, and kind of stoke fear from that. And there's nothing to be afraid of when the Fed raises rates. It's actually a good thing. It's been a long time coming for Feds to raise rates. So we'll see how many times they do it this year. We'll see how much it goes up. Now, how that impacts you. If you have a savings account, you have money sitting in there making virtually nothing right now. The national average on savings accounts, the interest is 0.06%. So to put that in perspective, if you have $25,000 sitting in a savings account earning that, at the end of the year, you will have made $15. That's enough to buy like 4 cups of coffee at Starbucks. Now, a savings account is for saving. It's not necessarily to be put in the market or to make a bunch of money. That's not the point behind a savings account. But one of the things that you can do is there are some options that you can invest. That money makes some more than what you're making in savings accounts while it's still remaining liquid for the emergency fund that we're going to preach to have as much savings as you need for the unthinkable, whether it's a job loss, whether it's a medical bill or expense or a home issue. You always want to have that in your back pocket, but there are some other alternatives to just sitting in a savings account earning nothing. And we have those here at Raymond James. So I'd encourage you to call me. I can talk about what that means. We do have a bank account here, so you'd have a bank account with a bank card, but one of the things that we would be able to offer is we have a lot more investment options than what you would get at a bank. If you were to go to your bank and say, hey, I want to earn a little bit more on this money, chances are they're going to talk to you about a CD. Well, CDs, yeah, they might earn you 2.5% in 5 years, but you're also restricted to being in that CD for 5 years, or you're going to pay a penalty for taking that out. So that's not a great alternative for a savings account, because that savings account is there for you to be able to use it in the time of need. We do have some options here. I'd really encourage you to give me a call and let me know what your situation is. I can tell you what options we have and how it would work for you. But again, it's like a bank account. It's no different than a bank account, but we have a little bit more flexibility in terms of the investment options that you have outside of the typical CD or other investment vehicle at your bank. So I'd really encourage you to take a look. If you have some money on the side that is making nothing, give me a call, shoot me a message, and I'd be happy to go over what options you have and share a little bit about the different investment options we have here that are meant to save your money and to protect your money, but also to earn a little bit more on that money, so that as it's sitting there, that will continue to grow more than what it is now. So really take a look at that, give me a call, and I'd be happy to share a little bit about what options we have. Again, don't let the media, all the things that you see, stoke fear. If you have questions or concerns, call your advisor. It's extremely important. That's why we're here. We're not going to tell you, oh, your fears are unfounded, but we're going to explain that at this time you're positioned where you need to be. There's a plan in place, and just let's stick with it. That's what we're here for. So I'd encourage you to reach out to your advisor. I'd encourage you to reach out to me with any questions about maybe putting your savings into something that's going to make you a little bit more money but act as a savings account. And I know that you probably haven't listened to anything on this video because you've been staring at my forehead the entire time, so I'll explain what happened. It's the perils of being a financial advisor. So as I talked about on February 5th, with all that intraday loss and all the talk that was going on, I could do nothing but bang my head on my desk. So this is from February 5th. The good thing is it won't happen going forward, because I have officially padded my desk so that anytime I do this, banging my head, it will no longer leave a mark. So I know that you didn't really pay attention to anything on the video because you were staring at my forehead the entire time, but I figured I'd at least give you that. Thanks again for watching. Please do reach out to me. Please, if you have any questions about anything you want me to cover in the future, let me know. Again, thanks for watching. I look forward to talking to you again.